FX Today, I'm your host, Steve Edge. Well, trading last week was rather subdued compared to the week before. There was some news out of Europe and the US that did cause currency pairs to move. The ECB kept rates on Thursday at 0.05% and cut growth and inflation forecasts, pointing to further action by the central bank. This caused the euro to lose 100 pips, continuing its pullback from its two-week high at 117. Friday saw the U.S. jobs report, which wasn't as strong as expected, but didn't erase the chances the U.S. Fed might tighten this month. Well, first let's look at the euro.
We showed this chart last week. It's the 100 pip by 3-point figure chart from May 8th, 2014, the 139 high. Though the chart has pulled back to 111, we still aren't sure if the pullback into this bottom will hold. We do have the possible Fed tightening and the ECB loosening, which could go through that low at 104, but then again it could already be priced into the market. It's too tough to call with this chart and expect some sideways oscillations until that tightening and loosening comes. But turning to our 10 pip by 3 chart from the August 24th high, we can see that it's really been in a downtrend, building no significant bottom. Interesting was that up wedge or flag just ahead of the ECB announcement telling us that the euro will drift lower. We can see at the far right of the chart the bounce to 111.90 during the whipsaw when the Fed announced unemployment. Looks like with some distribution into that flag pointing lower. We believe the euro will move into a trading range heading lower next week. After all was said and done, the euro was just down 30 pips to close trading.
Moving to the cable, our
long-term 100 pip by 3 we showed last week continued to break that up wedge and rounded top as we correctly predicted. The sterling was down over 200 pips last week, closing at 151.70, and we still think it will keep going lower. Our 10 pip by 3 chart from the August 25 high of 158.20 clearly shows a downtrend with no bottom being formed. Thursday, the 10th of September, is the Bank of England's rate decision, and Friday is the UK inflation number. We will be looking for some indication of its direction as we expect it will build some bottom or top in the next 4 days ahead of that announcement.
This next chart is the euro-sterling pair.
It's a 25 pip by 3 from September 10th, 2014. We also showed last week. It has been doing some more work on that wedge as we predicted and seems to be poised for a breakout. We will be buying this one on the dips. Perhaps the Bank of England will be the catalyst for this to move next week as well. Turning to the yen-USD, we weren't able to determine the direction last week, but this week has provided some insight. Our 10 pip by 3 from the August 23rd high and subsequent short squeeze appear to show a head and shoulders has formed. We see this pair going lower and should take out its sell-off low of 116.10. We will be selling this on the rallies. This pair was down over 200 pips on this week to close at 118.95.
Before we look at our last currency pair, here's what's in store in next week's economic calendar. The last pair we'll look at this week is the sterling yen.
This chart is the 100 pip by 3 from May 12, 2014, showing the recent high of 195.88 on June 24. We showed this one last week. We correctly predicted this one to go lower and was down 400 pips on the week. It does appear to be coming into some support at this level, but if we turn to our 25 pip by 3 from June 24th, all we can see is a continued downtrend with no base forming as of yet. This will continue to go lower in our view. We will be watching for a base or another interim top to be formed, but will likely be affected by the Bank of England's announcements on Thursday.
Well, that's our show for this week. Be sure to like and subscribe to our channel, and we would like to see your comments as well. If you have any questions or would like us to cover a certain currency pair, please contact us too. For FX Today, I'm Steve Edge.